I know. Those summertime weekends, they fly by so fast, don't they? That's all right, though. I think we're the only people on the planet that look forward to Monday morning, right? Well, it's about that time of day again here, right? Back to work tonight. It's Monday evening already. It's August the 1st, 2022. As always, welcome back. It's Monday night. We're getting ready for Tuesday's trading session. I got a bunch of great trades setting up for Tuesday. Got a lot of great trades setting up for tomorrow. You know me. I'm going to cover all my favorite trades in tonight's video, that we have a game plan to make some money tomorrow. And as always, before we jump in and get this party going tonight, you better make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload, so make sure you subscribe. And if you enjoyed the video, do me a favor, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Where's the money to make on Tuesday? Where are we going to get our best trades coming in for Tuesday's trading session? Boy, I'll tell you, everything's pretty bearish right now, right? Bearish here in the short term in the Nasdaq. Bearish, you can't see it very well there on the Emini, and pretty bearish here on the crude oil. But I'll tell you, a lot of bearish short-term momentum right now. I shouldn't say that. Oil's more of a long-term bear as well right now. But I'll tell you right now, though, when you see tonight's kind of video here, you're going to see why there's a lot of really good long setups right now. Buying the breakdown on the E-minis, buying the breakdown on the crude oil, breakouts going higher here. So we have a lot of really good long trades setting up for tomorrow. I'm going to cover those in pretty good detail tonight to make some money for you guys, with you guys tomorrow. I definitely don't mind selling into some of this resistance up overhead here, but you'll see why tonight we got to be a little bit careful, right? Got to be a little bit careful with those shorts going higher here. We got potential breakouts going lower, so there's definitely plenty of short trades to look for tomorrow, but again, you'll see why tonight those shorts are going to be a little more difficult here until something changes here going into tomorrow's trading session. Now, speaking of tomorrow's a Tuesday. A couple things you want to be aware of here as we go into tomorrow. First of all, we're in that first couple days of the month. You know, anytime we transition into a new month, we do expect there to be a little bit of an uptick in volatility, right? So we do expect more of this volatility continuing here for tomorrow. It's the first week of the month, so the big news of the week is on Friday, so we'll keep that on our radar later on here this week. As far as tomorrow goes, there are really kind of three things that you want to kind of keep in mind. We are going into earnings again. There is earnings this week, but they're not nearly as potent as they were last week before that, so I'm not going to waste your time talking about earnings. There are really three big things you want to be aware of tomorrow. First is a Fed speaker tomorrow at 9 a.m. We got Charles Evans speaking at 9 a.m. That's important because everyone's wondering right now if the Fed has killed this economy enough to warrant not raising rates as aggressively in the month of September. And so we're hoping that Charles Evans and the rest of the Fed may give us a glimpse into what they're thinking for the next Fed meeting. So that's definitely something we're watching here right now. Later on in the session, JOLTS report, right? What has been widely known as one of the best employment indicators the Fed uses to gauge their full employment radar. JOLTS report at 10 o'clock Eastern time. And then, of course, you got my gal, right? We got Nancy Pelosi, which is not really kind of a big, well, I guess it's become a big headline. It didn't seem like it would be a big headline. It might not affect us too much tomorrow, but we got Nancy Pelosi, the Speaker of the House, who they're kind of playing this little dance, right? She's apparently going to Taiwan tomorrow. Of course, mainland China's not very happy about that, and so there's definitely kind of some drama unfolding between Pelosi and Taiwan. We'll see if that matters tomorrow, but I'll tell you that headline is not going away right now, so it's definitely something I'll be keeping an eye on. I can't exactly imagine how that will affect us tomorrow, but you know the news media, right? They're going to find some creative way to impact these markets tomorrow, so we'll be keeping an eye on that. So Fed speaker at 9, JOLTS at 10. And will my gal Nancy, will she touch down in Taiwan? And will they all freak out because of it? We're going to find out. And we'll see if that moves these markets for us here as well. Going back to our charts, though, right? The money is in the charts, right? The money's not in the news. The news is, right, those are big grenades that go up, but the money are in the charts here. And so let's talk about this here for tomorrow. Now, whether you trade one of these markets or you trade all of these markets, make sure you watch the entire video tonight because I'll provide provide something new throughout the entire lesson. Different trade ideas, different advanced tactics, and I try to save the best stuff towards the end, so I'll give you a reason to stick around all the way to the end. I'm going to go NASDAQ, S&P, and crude oil, and we're going to jump in here first here on the NQ. This is a 4,000 tick chart here on the NQ. This can also work for the micro NASDAQ or the QQQs. A lot of our students trade that stuff in our trade room. Looking at the three key components going into tomorrow to help me figure out where the best money making trades are for you guys here for tomorrow. First thing is a range. There's a range right in the middle of this chart right now, and ranges are, well, they're magnets, but more importantly, ranges are balanced markets. So the market goes down, it goes up, and of course now it's trying to rotate back down, which is usually roughly about the amount we go above. So this is important. This is important, one, because it definitely tells us that if we get a strong move going higher, that is a failed rotation for the bears, a very bullish clue. The next thing too is if we do end up all the way down here with a range above us, even though this will be very bearish momentum as we go lower, we're looking for that long going back up into that trading range. So that range with rotation off the high is a pretty important clue. Second thing here is the medium-term bullishness. You can't really tell this on this particular slice of the chart, but if you look a little bit further out, you'll notice we're looking pretty bullish right now. The overall direction, I would say, kind of medium term. We're not exactly we haven't quite turned the weekly chart around yet. So we're still looking at long-term bearish here, at least for now. But this is definitely more of a medium-term bullishness. Now, why is that important? Well, because again, it tells me now you got to think there's buyers waiting down here. You definitely got to think there's some bulls waiting for a possible breakout going higher. I've got some levels up overhead there. That 13,253, 13,271. And 13,314, and another one here is a major support below us, right? There's a lot of levels. There's a lot of levels waiting down here below us. And when you combine that with a kind of a medium-term bullish trend, a range magnet, lots of support down here. Again, this is why I said earlier, when you see the chart tonight, we might be bearish in the short term, but there's a lot of really nice long setups that we have here going on. And we'll talk about some of the shorts here as well, obviously. But at this point here, it looks like to be easier to be a buyer than a seller, unless something changes. And again, who knows, right? My gal Nancy touches down in Taiwan. Who knows what the heck can happen with that? I'm kidding with you, Nancy. I'm kidding with you. Okay, so how do we trade this? If it goes up, if it goes down, let's talk about here if the market rises higher. Okay, as the market rises higher, where do these buyers want to get to? Where's the objective? The objective right now, like it always is take out some of these highs, right? If they go lower, we want to take out those lows. So the buyers are trying to take out these highs, and you can probably assume that this kind of whole area here is going to be a bit of a resistance zone. So here are a couple pattern setups I'm watching for a move as we go higher. One of them is going to be one of my favorites. This 1, 2, 3 move, and then a trap off the low of a new channel. Now you're going to want to get this obviously before we retest those highs. This will be one of my favorites for tomorrow, and it might happen here while I'm sleeping here overnight tonight. So if you're in Europe or you're in Asia, keep your eyes on that one. So you'll notice here, right, we come off of that low, we rotate higher, right, a little punch going higher, looking for a channel off those highs. And I always like to, whenever I'm concerned about buying too close to major resistance, right, especially in this case with a range below us, a trap setup, one of my 4 favorite entry setups that we cover in that free trading course, which I know a lot of you guys have taken. That trap is going to be one of my favorites here as we go higher here. Now the sellers, they may come in and they may choose to sell off that high, and we'll talk about that here in a second. But as we go higher here, right now, let's say for example we take out that high here, and then let's say for example now the buyers come back, they pull back to the moving average, and they blast off of that moving average. Now remember, there's a range below us here right now. That range below us is a big problem. It basically tells me I can't buy that pullback, not into that high, right? See, we see a lot of these. We see a lot of these convincing moves higher, but they can't quite hold that pullback. So they're going to hold that pullback, and if they can, this now becomes, we call a 1, 2, 3 breakout. Now, 1, 2, 3 breakouts are really, really simple. So we take out that high, we pull back to the moving average, we blast off the EMA. I'm going to simply draw a trend line off that high. I'm going to draw a channel now off of that low, right? So we make a trend line off the high, channel off that low, and just like I mentioned before, I always like to look left and find some of those, right? Find some of those prior swings. Now, it's not required, but I definitely want to get ideally below one of those prior swings, get below the moving average. Okay, this is the 21 EMA. You'll learn more about how to use that in that free trading class I mentioned before. What I want to see is I want to see a trap or the bears coming in for a failure on this and then into a pullback combination. So again, one of my favorite breakout patterns here, this 1, 2, 3 breakout move, right? Pushing through major resistance in a medium-term bull market. I like that trap, right, off the below the swing. I like that failure off the moving average and that, right, in that pullback combination. Again, these are the same entry patterns I talk about in the free trading course, which reminds me, I know most of you guys have taken the free course at this point, right? You're making money on your own by using that free class. But listen, if you're here for the first time today, if you haven't taken that free class yet, what I'll do is I'll put a link here for you in the upper right-hand corner. If you're missing the best trades right now or you're taking too many losses, the strategy I teach will get you into more winning trades, help you avoid costly losses, and give you a ton of confidence. That free trading class is a perfect spot for someone trying to transition from part-time trading into full-time trading. So if you're serious about your trading, want to make more money in the markets, grab that link up there that popped up there in the upper right-hand corner. So that covers that 1, 2, 3 breakout. Now, there's a few more here we can look for as well. Let's say, for example, now it pops up and begins to grind, right? Pops and grinds, right? This is a very distinct type of movement. That grinding movement is very, very important because it basically tells you that any sellers who were trying to sell off that high, they have completely walked away. I'm going to mark off that high. I'm going to mark off that big low. And again, I'm going to look left, go finding prior swings with the goal of getting in at the low of that hidden channel below a prior swing. If I don't, what I'll do is I'll look for bears to come in and get short off the moving average, and I'll basically look to use those stop losses as fuel for what I call a failure setup. Now, where do we think the target would be on something like that? Well, we know we've got some big levels overhead, but an easy way to think of breakout targets is the first leg, which is that kind of pop leg, into our third leg. So you're going to hear me talk about that a lot throughout the video and a lot in our video classes here at School of Trade. But first leg and third legs, right? Trends love to go 1, 2, 3, and that first leg and third leg are usually very, very symmetrical. So keep an eye on that as we go higher here. Those are probably going to be the two most important breakouts as we go higher, just because we got to kind of get through that area of resistance. Now, here's a question. How do we sell it back down off of that high? You know, is there an easy way to do this? Well, remember, we already know that we have this rotation off the high right now. We already know that we have medium-term bullishness. So as we go higher here, if I'm trying to sell off that high, I better be patient. And really what we need another one of these, right? We need another one of these, right? One of these crown reversals. We talked about crown reversals last Friday. I never got it, but we talked about that last Friday. As we go higher here, what's the problem? Momentum is the problem. It's a great level of resistance with a range magnet below, but momentum's too bullish at this point. So what do we do in this situation? What we do is we have to get some sort, we always talk about there are 3 rules to trading a reversal. We got to be at a major turning point. That's 1. We have to see signs of exhaustion. That's 2. And we have to have some sort of catalyst, which I like to use is running stops. So as we go higher, we run into that major level of a major turning point. Now I've got to see signs of exhaustion. Okay, so now we want to use the 2-try rule. Let the buyers try once. Let them try twice. Now, here is the challenge with this. We're very bullish, again, overall right now. So I got to be very careful about as the market goes lower here, you got more buyers coming in. They're trying to punch this thing higher. So the only way I can really safely sell this is it can be a trap above that high, right? That trap. Now, again, just like that, right? So we go up. The buyers try once, the buyers try twice. See a little trap right there, right? That's a great example there of what we should be looking for over here. Okay? What I always tell my students is it almost always takes longer for that reversal to set up than you think it is. It's not going to take 30 seconds to set up, right? It'll take a while to set up here. Possibly up to an hour. So as we go higher here, buyers come in, try once. Buyers come in, try twice. I want lower lows in price. I want that trap. That trap will be the best place here for that short. Now, the good news is that once we get that short going lower now we can go out, we can find a new channel. We can mark off the low there. We can mark off the low, basically the high there, right? That new channel. And then once again, as we always say in our trade room, first test is the best test. Now, I'm going to keep it simple right now. This could be any of those entry setups that you learn in the free trading course. Could be a trap, could be a buyer failure, could be a pullback off of that high. But that's how you're looking to sell it off the high, right? We got to be careful being a seller as we go higher here, because a lot of bullishness on this market right now. So do we get that short-term entry on the way up? Do we get that breakout going higher, right? A couple good breakouts going higher. Got a couple good levels we're waiting up overhead here to get hit. Or will they take out that high and crown reversal back down into that trading range? Got those covered. Now, the big question, which really might be the best trade of the day tomorrow, is what if they do take this thing lower, right? Can I buy it going back up? Can I sell it as it breaks down? Yes and yes. Let's cover that on the S&P. The S&P, of course, is almost identical to the NASDAQ here right now. Pretty much everything we talk about in the NASDAQ can be applied here to the S&P as well. Now, there are 3 basic components. They're pretty much the exact same key components here that we talked about on the NASDAQ. The first one is this trading range. And you can see on this one, you can see right away, this is a lot more of a balanced market right now on the Emini S&P. For whatever that matters, it's more balanced. The key you'll notice though is the amount we go below is the amount we go above. The amount we go above is almost the amount we go below, right? We go below, we go above. So we're rotating back and forth. Okay, right now, what we see right now, we are rotating from below that low. Okay, that's called range with rotation off the low. Okay, now why is it important? Well, because as the market rotates from below that trading range, it builds up a lot of momentum. So that would definitely tells me if I was a seller, right, trying to sell up around these highs, be careful because first of all, look, that amount we went above didn't quite take out the amount we went below. Now, I will say, it's probably close enough, right? That low right there was pretty darn close, but you'll notice it still didn't take out that big low. So you could definitely say that the bulls have a little bit more of an edge right now than the bears do as far as just today's information. Now, second clue is exactly like we saw on the NASDAQ. If you look at just this time frame or this day, it doesn't really tell you very much. But if you look a little bit bigger picture here, again, we're looking at kind of a medium-term bullish market right now. I don't want to say long-term because, again, check out a weekly chart and you'll see we haven't quite turned over on the daily or the weeklies here just yet. That would have everybody buying every pullback. But for right now, the medium term is looking pretty bullish. And then, of course, you got the major support levels, right, down below us. If I take, for example, a line there, right, kind of a measured pullback there off of the high. A lot of support levels below this trading range. Again, this is very similar here to the NASDAQ, and why I said earlier that it looks like there's a lot of bull setups here which are worth looking at here for tomorrow. Now, Couple differences here. Couple differences. On the NASDAQ, I talked about looking for a channel going higher and looking for that long. The NASDAQ has a lot more open space to work with than the S&P does. So I would say take that initial, that short-term pullback that I mentioned first on the NASDAQ. Be careful on this one because you can definitely see there's no shortage of resistance there as we go here. But because we have less space here, I definitely think there's more potential now for what we call a 2-try breakout. So here's something I didn't cover on the NASDAQ, but you can definitely use it on the NASDAQ as well. Let's say, for example, now we see a real strong pop up, right? Real strong pop. Something happens. I'm joking around about Nancy Pelosi, but you know what I mean? Who knows, right? Something happens overnight. I don't know. Market jams higher. Real strong move. Strong move, then shallow pullback and higher high in price. Okay? Now, be careful with a lower high in price. Okay? Lower highs, no bueno, right? I want higher high. Strong move, shallow pullback. Higher high in price, what do we always say? Traps, baby. Traps, baby. That's the one you want right there, right? That's a really good setup. You can see it right here. Strong move, shallow pullback, higher high. Everybody loves that pattern setup. It's a very easy pattern setup, one of my favorites, and something I try to take every time I see one because they're pretty darn good, right? That's one you can also apply to the NASDAQ, but again, the NASDAQ, it's got to really rip because it's more space up overhead. So obviously same ones on the S&P too, right? We take out that high, we pull back to that moving average, we blast off the moving average, right? We find that new channel. I don't want to go over this again too much because we talked about this in the NASDAQ, but that's going to be an option for us, right? Got that. Again, we call these 1, 2, 3 breakouts, right? 1, 2, 3 breakouts. Because again, it's that 1, take out that high or close to it. We pull back 2 to the moving average, and 3, what do we always say? We blast. We jump off that moving average. Not like that guy, right? No, right? Not like that, right? It's going to really blast to that high here. If that happens, then we're drilling down. This is a 10,000 tick chart on the Emini. We're drilling down, find those traps, find those failures, find those pullbacks. And guys, I have hundreds of examples of traps, failures, pullbacks, all included in that free trading class that I mentioned up top there. So if you haven't grabbed that yet, what are you waiting for, right? You're leaving money on the table here every day. So grab that link in the upper right-hand corner. Or one of my all-time favorite breakouts is that pop and grind. The pop and grind is almost always a money trade because it signals the opposite side walked away. Mark that high, mark that low. And again, ideally, I want to get underneath one of those prior swings, combine that off the low of that channel. I love those trades. First leg, third leg, right? Capiche? That's going to be a good one to keep in mind as we go higher here. And then again, I've got some levels up overhead. I got 72, got 84, we got 91, and probably the granddaddy, I would say if the buyers can get to 42.04 and 3/4, I mentioned a weekly chart. This is a major trap high on a weekly chart, on a daily chart. That 42.04 and 3/4, you're going to want to keep that on your radar if these buyers can keep it together here this week. That's where they're going to want to get to, right? That's kind of the ultimate goal. Now, tomorrow, maybe not tomorrow, right? But we'll see later on this week. Again, look at a weekly chart. That level is it stands out like a sore thumbs trap high on the weeklies. So we know what's going on there. And again, a lot of what I said there, unfortunately, was the same thing we talk about on the S&P. I don't mean to waste your time here. Now, as we go lower, how do I buy it back up? Right? First of all, right, we stay with the middle. Stay away from that middle. The middle is where good trades go to fail. They go to die, as we say in our trade room, right? So I got a lot of support levels down here. It's an overall, again, medium term bullish trend here right now. And so as we go higher, what's my concern? Right? What's my concern? I always tend to tell my students there are two things you want to think about. How's my location and how is my momentum? Location is fantastic, right? We're at support levels, range above us, long, medium term, bullish trend. Fantastic location. What's not so fantastic? Momentum. Why? Because we're rotating off the high, right? It's not like this is a bull market into a range. Right? See, in that situation, you can get real aggressive down here, right? If we're just bullish into a range, easy. easy. You can get pretty aggressive buying into those pullbacks because the range is a magnet. But in this case, though, it's a range. We went above the range, and now we're rotating back down again. I still want to buy down here, but again, it's no joke. There's a lot of bear momentum. So as we go lower, what's the key here? We have to first of all get to a major turning point, support, easy. Then see signs of exhaustion. Okay, this is where you think of the 2-try rule. Okay, this is where the bears come in. They try once, they try twice. Now, on this one, I don't need to be as selective, in my opinion, this one, for the long side here, because again, we do have overall bullishness, right? If I want to sell off this high, I better have an almost perfect, right, reversal set up, those crown reversals off that high, right? Like this one. 1, 2, trap, and back down, right? You've almost got to get that perfect setup because, again, we're overall bullish, right? Medium-term bullish. But as we go lower here, if I can get these bears to come in and dig their own grave, let them try once, let them try twice. Between you, me, and YouTube, one of my favorite tricks is to draw a trend line off of that high and then bring it down to that major low. And oftentimes, it won't line up with that medium-term low, but it makes for the perfect kind of early entry signal. Because think about it, all the stops, right, all those bears, their stops are sitting right there. And so now we've got 1, major turning point, 2, signs of exhaustion, and the third thing we need for a good reversal is a catalyst, right? Some sort of jet fuel, right? That kind of kicks this thing into gear, and that's where stops come in. The easiest money you're ever going to make in trading is when you're getting long below a range and the bears are getting stopped out, because if you're a seller and you're caught on the wrong side of this, there's nowhere to hide. You got to buy your way out of it. And so in these situations, the buyers are buying low and the sellers are now buying as well because they're getting bounced out of their foolish pullbacks here, their breakouts. Now, as we go higher, right, that 2-try failure off of that low, remember, your job ain't over yet, because now the amount we go below is going to want to push up and go higher here, right? This one thing on the buyer's minds now, how quickly can I get back and bury that high, right? That's exactly what the buyers want once those bears fail, okay? And so what I'll do is now look left, find a new channel by drawing off those highs, bring it down, find a trend line, I should say, bring it down, find a channel, and again, look left, find some prior swings, try to get underneath prior swings. Ideally, you want to get underneath that moving average, though. That's kind of the trick, because then you can trap in the bears, trying to get short below the EMA, and you can hit that move going back higher here. Okay, the goal of this, just so you know, the goal is I want to grab that failure, right? Those are probably the best ones. And then as we go higher, right, trap, failure, pullback combo. And again, you'll see a lot of examples of those so you can kind of get a good grip on what they look like in that free trading course. Now, and again, that will also apply to the NASDAQ as well. Now, as we go lower here, what has to happen for us to want to sell this thing? And first of all, I would imagine that because there's all the support down here, I would imagine what we're looking at for tomorrow is and again, this is what I know right now. This could easily get very bearish overnight because of who the heck knows, right? So anything can happen here overnight. But from what we know right now, it's very realistic to think we might see a strong move down, get some selling opportunities for a retest of that low, and then go out and get that 1, 2, and that move back up again. So that's going to probably be the best way to think about a breakout going lower, right? Play both sides of it. Look for that strong move down, sell that retest. I'm going to go into more details here in a second. Don't you worry. And then, of course, look to rope in those weekend sellers who are late to the party and use their stops as rocket fuel back into that trading range. So what exactly would that look like? Well, for example, let's say, for example, now we break down, we take out these lows, we don't get the bears coming in and trying twice and then get the punch back up like we want. Instead, what happens is the market begins to grind and grind and grind. At the same time, there'll probably be some headline. Some headline. Oh, Fed speaker says this, Pelosi says that, right? You know what I mean? There'll be something that will supposedly shake this momentum into being bearish at that time, right? That'll be the headline you'll be seeing in the newspaper or the, whatever website you're watching here for tomorrow. At that point, we're going to mark off that low. We'll mark off that high. And again, look for, as I always say, look for those traps above prior swings, right? Get that failure coming in above the moving average. Remember, at this point now, it's a very strong move down. The odds are pretty good that whenever we see a real strong move that can hold that breakout through that range, there's a good chance they're going to come back and retest that low. So what I'm going to do is I'm going to find that channel. I'm going to look for that short, that trap, or that failure and sell it back down. And then from there, take some profit off at that low. And then this is where, as we go lower here, this is where now think about it, right? The smart money, they're coming in, they're selling high, okay? Now, who's the one who's selling at these lows now? These are the weak hands. These are the dumb money, right? These are the brand new traders who want to learn all about how to use trailing stops and stuff, right? I'm kidding with you, obviously, but these are the inexperienced traders down here. These are the weak hands, okay? The bears are already, the pros are already in. They're getting out now at that low. So now, as those bears try once, try twice now, think about where their pain is, right? Think about where their stops are. That's exactly where we can hit those stops. That, again, is that two-try failure. Why two tries? Because we are so bearish at that point. Not bearish in the medium term, but bearish in the short term. Remember, if you're a short-term trader, short-term momentum is really important. All right. Yes, I'd like to go with the long-term momentum. Absolutely. Right. There's nothing better than having short-term momentum agree with the longer-term momentum. Right. But, again, that's not going to happen as often as you might think it is. So once those bears try twice here, now we know where their stops are and we can punch it right back up into those stops. And again, I'm out of space here right now, but I'll find that new channel. Right. And then grab that first test. It's the first test you want off that channel. Channels are kind of like single use in my eyes. Once you get that first test, bam, take that trade and then go looking for a new channel, right? Rinse and repeat over and over again. So that is a scenario I would definitely keep in mind for tomorrow, not only on the S&P, but also here for the NASDAQ. And this could also be, too, they could take out that low. They could pull back. They could simply blast off that moving average, right? A little bit different breakout, very strong move down. So we mark up that low, we mark off that high, we get back up into some of those prior swings, those failures, back down again, right? So again, looking to sell off the high of that channel because it's a strong move down, but knowing that this may not keep going forever, right? And at this point now, the bears come in 1, 2, and then back up into that trading range. Again, this could really be probably the best trade for tomorrow. It really could be the best trade for tomorrow because it ropes in those bears down here and just gives you that kind of squeeze, right? That short squeeze going back up into that trading range. Okay, so I think now we've got a pretty good game plan here for the S&P and the NASDAQ. What do you think? Let me know in the comment section. I would love to know in the comment section if I missed anything. Do you disagree with my analysis tonight? What do you think? Or maybe you grab that ground reversal off the high. Let me know in the comment section. Let me know how you're doing with this stuff here on your own trading. Over on the crude oil, wrapping things up here on the oil. Boy, there are 3 main components right now on the oil. Kind of the oddball of the group here right now. First of all, bearish into a trading range, right? Big, strong move down here today. Pretty much a 5% move going lower into a trading range. Now, what does that tell me? Well, it tells me that, we know that ranges are magnets. We know the amount below the range will be the amount above the range, right? That's a level of resistance. And we also know that in most cases, a bear market into a trading range will want to pull back and the bears will want to sell it back down into that trading range. Okay? That's what a bear range tells us. So bears are trying to sell above the range because the ranges are magnets, or bears are also trying to sell a breakout, right? Going lower, which, based on the fact that we saw that bad GDP report last week in the U.S. We heard from pretty discouraging numbers out of China overnight, which kind of led to this big spillover here. So the economy is slowing down, demand is slowing down for oil. And so, I wouldn't be surprised if we do see a breakout and go down to that $90 a barrel, right? Basically 95 to 90. These $5 moves are pretty commonplace right now on the crude oil. So we definitely got a bear momentum into a trading range. But I'll tell you, that's about as far as we go tonight, where it looks good to be a seller right now on the oil, because another big clue is that rotation off the low. Now, if you've been watching so far, you know this rotation off the low right here, it sets up what could be a massive short squeeze. Okay, these are one of my favorite types of reversal signals, and that is basically it's a bear market into a trading range, right? We go below the range, and as we rotate higher, if we can take out some of these highs and the bears can't come in to hold this, what's going to happen? All the bears who sold this thing earlier today, they're going to get squeezed, right? They're going to see that P&L get smaller and smaller on that trade, and they're going to get out of that position, and that's what causes those squeezes. And with a range above us overhead, small range above overhead, that's again, it's still very bearish right now, and this could easily change. Fundamentals are bearish right now, technicals are bearish here, but I'll tell you right now, that rotation off the low, it just reeks of a squeeze. It really does, right? Now, what also kind of makes me, smell a little bit to the bull side right now, right, is going to be that bigger range above us. Not this little guy over here, but this, that monster, as they say, right? So that range right there. Now, why would that be important? Because come on, look what we are. We're at big levels of support below that trading range. We have unless these bears can hold this thing going lower, what do you think it wants to do? It's going to want to go right back up into that trading range. Now, I'm not a huge fan of trying to bleed together kind of long term with short term, but this one's just too obvious to pass up. Look at the daily chart, for example. Look at a 4-hour chart, and you'll see a big range there, right around that 96 to 96.5 level, just begging to get this squeeze going higher here. So, how do we trade this? Now that we kind of know what's going on this chart right now, how do we make some money on this? Well, first of all, as the market goes higher, this is the definition of a scenario where a 2-try trap will be a money maker. Right, so we run higher here. As we run higher, we've got support trend lines coming in. Remember, strong move, shallow pullback, higher high in price, traps, baby. That's a great setup as we go. If I can combine a trend line off that high, off that low for a channel, man, that's a great trade long there as well. That's very likely here as we go. Or we pop and we grind. We pop and we grind. Mark it up. Find that high. Find that channel low. We pull back. Yes, right? We pull back. Trap. Failure. Pull back combo, right? First leg, right? First leg. Third leg. Trap. Failure, pullback. Again, you'll see a lot of examples of those, of how we apply this stuff in that free trading class that I mentioned earlier. Or maybe we pull back, we take out that high up there, right? We don't get a big pop just yet, but they pull back to that trend line and they blast, right? And they rip this thing going higher. We're marking that high, finding that low. And again, I'm keeping it simple here right now, right? We're gonna go into more details on kind of how to find those levels, what to use. You'll learn more about that in that free trading class. Like I mentioned earlier, this is a 2,000 tick chart, so we'll drill down to our faster time frames, about 1/4 of this one, and we'll grab the entry signal coming off that low. Range above us, prior week close. All of these are easy magnets as we potentially get that squeeze here. And then how do we sell this thing? As it goes higher, what's the best way to sell this? Well, you'll notice there's a big deal here. This trend line coming up is not pretty. It's not easy, right? So what you're going to do is, there's 2 ways to do this. You can, 1, look for a crown reversal, which I think is asking for trouble here. Right, that crown reversal, because that'll give you a trap setup that you need to avoid selling into that trend line. I think that one's asking for trouble. What's more likely is we get underneath, back into that range, and then back up in that short off that trend line a little bit later on in the process. Okay. As you can see, this is not easy. This is not a very easy way to sell this thing. Again, the crown reversal's nice, but boy, that's a kind of a gamble trade, right? Kind of a gamble setup because you have the trend line in the way, momentum coming off of that low, range above us. So not my favorite, but hey, that will be a way to do it. What I like a lot better is let's see them get underneath that trend line, see these bears come and actually hold this and defend this, and then we'll come in and look for that short off of that trend line. That's a much better, more reliable trade at that point, in my opinion, right? So that's how we sell it as we go higher. As we go lower, can I buy down here? Oh, hell yeah, right? But I need to what? I need to rope in the bears. Remember, we are not a bull market right now on oil. I know there's a lot of clues we may turn bullish, but if we go lower here, this is not a bull market. This is not like the S&P and the Nasdaq right now. Okay, so the S&P and Nasdaq, they've got that bullish momentum kind of medium term right now. Not the case on the oil, right? Oil is very much, again, fundamentally and technically right now, medium term bearish. Okay, again, we're still dealing with that invasion in Ukraine. We're still dealing with a lot of log jams as far as supply chain. And of course, anyways, so we know that, right? We know that bears try once, bears try twice. You got it, right? Use that two-try failure and then take that sucker and rip it right back up into that trading range. Okay, remember, think about this now. Might we go below? Might we go above? Okay, definitely take some profit off at the other side of that range, and then certainly leave that runner. I'll tell you right now, this could be what actually happens, right? The market may take this low out, trap in some of those bears, get that squeeze, right? And then as we squeeze going higher here, now we're getting that, right? Now we're getting that pop and grind. You know what I mean? Like this could easily pop and grind. It pops up, strong move, shallow, you know what I'm saying, right? That could easily lead to all the reversal patterns as mentioned earlier. That might be what starts the whole game, right? That might be what lights this thing on fire, is trapping in those bears down here. And then as it rips higher, the bears coming in right up here, they're standing right in front of a freight train at that point right now. So as it kind of rips higher here, do we go back above the moving average and blast off the EMA, find that new channel, buy that first test? Right? You get the point, right? As we go higher there, I like that a lot. And then the same thing applies as we go lower. Again, I would not be surprised at all if we take out that low, right? We roll over, take out that low, we grab the moving average, we blast off that moving average, right? Find that low, find that high, and sink your teeth into selling off that high, right? That first test is the best test. Or it's that pop and that grind going lower, right? We've covered all of these as we go. Where would be a good target as we go lower here? 90. Easy. 90 bucks is a very, very good target going lower. It's about what? A little bit less than $5 down here. So easy, right? Pretty easy target there for those bears going lower. But don't be afraid, though, for that move lower. Don't be surprised either. That failure into that rip going higher. It smells like a squeeze, though. It just does. We'll see, though, what happens. Because, again, we got a lot going on right now with the price of oil. So, the charts are telling us one thing. Now all we have to do is wait and see what happens here overnight. See if any headlines come out from Fed speakers, that JOLTS report tomorrow. And we'll see if good old Nancy can touch down in Taiwan and see if the whole world loses their you-know-what tomorrow because of it. That should be fun. But no matter what, though, tomorrow morning, 8 o'clock Eastern time, we're going to come back together and we'll trade together tomorrow morning in our trade room. If you're looking for a great place to learn and trade along, if you're sick and tired of missing the best trades each day, or you're making too many mental mistakes, our trade room is designed for new traders, experienced traders, right? The game plan is now laid out tonight. Tomorrow, we'll trade the game plan together. I have all the software tools, all the trading checklists. All I need right now is you. Start off first, though. I'll put the free class links, all the membership links. Grab the free course, learn the basics, get yourself going on that, and I'll be here to trade with you tomorrow in the Trade as a member when you're ready. Call that toll-free phone number if you have any questions along the way, and don't be afraid to use live chat on the website as well. And you can always drop questions, of course, in the comment section below. But it will be a much faster response, though. Call in the office or using live chat on our website. All right, guys. Hope you learned a bunch here tonight. Hope you use it tomorrow to earn a bunch tomorrow. And as always, if I don't see you guys tomorrow morning in the trade room, I'll see you guys same time, same place back here for tomorrow. My name is Joseph. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.